got the voice that's mean, asking those questions that you never seen. He's got that fire, burning bright and clean. Andrew Keen making waves, break the routine on the Keen on show. He brings the heat, asking the minds, digging deep till they bleed. No sugar-coated truths, no lies to deceive. Andrew Keen, the master of the interview beat. He's got the knowledge, he's got the flair, challenging ideas with a fearless stare. With every question, he's uncovering what's there. Andrew Keen, a truth seeker, he's aware.
Hello, everybody. It's Tuesday, the 9th of December, 2025. Last week, there was a really interesting op-ed in the New York Times about what the left could learn from Trump's brutal efficiency. It was by Mark Dunkelman, who was on the show actually earlier this year in February. He had a new book out then. It was being quite influential. It's called Why Nothing Works, Who Killed Progress and How to Bring It Back. And while Dunkelman is no great fan of Donald Trump, he does argue that the top-down reforms of the Trump administration need to be in some ways mimicked from the left. My guest today, though, who has a new book out today, I think would disagree. A couple of months ago, he had an op-ed in the New York Times, which he co-authored with his co-author on his new book, which is out today, Capital Evolution, The New American Economy, which suggests that Trump's top-down reforms are an attempt to copy China. And it's a terrible idea. Seth Levine is joining us from Colorado, where he lives. His day job is as a venture capitalist. Seth, congratulations on the new book. Actually, as you know, Elizabeth McBride was on the show a couple of months ago too, previewing the book. Why is Dunkelman wrong, Seth? Doesn't he have a point that the only way to change America is from a top-down manner? I know you argue otherwise in Capital Evolution, but there doesn't seem to be much evidence that anything is changing in America these days.
So first of all, great to be on. You had a fantastic conversation with my co-author. I hope I can live up to that. So I don't think that that's the proper read, Andrew, of what we wrote or really of the book, right? So I think, and it surprises my friends sometimes when I give Trump credit for at least diagnosing some of the problems. Oftentimes I feel like the solutions that Trump brings are not quite right. And what we wrote about in that op-ed was exactly that, right? Trump's diagnosis that the American taxpayer deserves some return on their investment. In this case, we were writing about Intel. That actually sounds about right to us, but singling out individual companies, and in that case, after the fact, essentially extorting from them, and by doing so, creating almost like a form of crony capitalism, that's not going to work, right? So there were the money that Intel took was actually from the CHIPS Act, but what they took was from a program that supported a couple of dozen companies. The program itself could have, and I think we probably would have argued, should have included some sort of mechanism for payback to the American taxpayer. It didn't. And then Trump, after the fact, went in and said, well, actually, you, Intel, we want a stake in you, and sort of ignored everything else. And what we talked about was Trump was copying the crony capitalism, you need to know someone in order to start a business or in order to be successful, which is now a hallmark of the China economy. He's copying that aspect of China, and that doesn't make any sense. I suspect that what's being argued in this most recent op-ed, I apologize, I haven't read it, but what he's arguing there is that Trump does have reasonable instincts, and the left needs to stop running in circles, sort of debating each other about whatever the right way to do X or Y, and just sort of get something done, right? It's like the General Patton quote, right? I'd rather have a plan that I can execute today that's good than a plan that I can execute in 2 weeks that's perfect, right? And I think that maybe that's a little bit of what they're saying.
Let me revise the question then. You write in your new book with, which, as I said, which is out today, co-authored with Elizabeth McBride, on the new American economy. What happened to the new American economy? We were promised it by Biden. You talk about the CHIPS Act and all these progressive reforms that just didn't happen. That's the essence of Dunkelman's book, Why Nothing Works. It's also something that Ezra Klein and Derek Thompson write about in abundance.
Yeah.
What is the problem with what some people like to think of as this new American economy? Why isn't it happening, Seth? Or maybe I'm wrong. Maybe it is happening.
No, we're in a time of transition, and that's what we argue in our book. I think that we are sort of cousins in writing to that book, to Abundance, the Klein Thompson book. Right, these are related ideas. They overlap. They're not entirely overlapping, but they're somewhat overlapping. And what we talk about in the book is this idea of meritocracy, the ability for people to move themselves up in society. That's kind of gone away. We've been operating in a very strict form of capitalism for the last 50 years, outlined by Milton Friedman in a book he wrote in the late 60s, and then ultimately in a more consumable fashion in an essay that he wrote in the New York Times in 1970. And we've elevated shareholders above everything else. And we've kind of taken for granted that's capitalism. That's American style capitalism. And what's happened is it just simply doesn't work, right? It trickle down economics didn't work. And what's happened over the last 50 years is we've created incredible concentrations of wealth and opportunity, and at the same time, political instability. And so the argument of the book is not that we should throw capitalism out, and there are plenty of people arguing for that right now, right? We just elected a socialist mayor of the financial capital of the world, the largest city in the US. That's, in our minds, not the answer, and certainly in our read of history is not the answer. But continuing on with shareholders only is also not the right answer. Now, I think we're in this transition because I think many people have already recognized that. And so we're sort of in this messy middle where we're at the end of neoliberal capitalism, Friedman style capitalism, but we haven't quite figured out what takes over.
Right. And we've done a number of shows on that quote unquote transition. I think when people use the word transition, it means they have no idea what's coming next. And Elizabeth was a great guest. She talked about what she called the Frankenstein version of neoliberalism. Some people might be watching this, Seth, and thinking, why is a wealthy venture capitalist from the Foundry, one of the top early stage VCs in the US, why is he writing about the problems with the meritocracy? We actually had your colleague on the show, Brad Feld. He's been on a couple of times. He's also critical of this meritocracy, but you guys are doing rather well out of all this. You're a wealthy man, so's Brad. Is it a bit rich for venture capitalists to be writing books about the problems with neoliberalism?
I think that it's a convenient dismissal for people to make, like, oh, well, you're wealthy, so therefore you shouldn't have anything to say about it. I think that it comes writing books like this, and this is my second book with Elizabeth. Actually, she and I have written both of our books together. The first one was about really entrepreneurship much more broadly, and frankly, how the tech industry has sort of overtaken this concept of entrepreneurship. But really, most entrepreneurs are not tech entrepreneurs; they're Main Street entrepreneurs. Small businesses drive roughly 50% of GDP and 50% of employment in the U.S., and we forget them at our peril. And so that kind of marries well into this idea of meritocracy and the ability for people to pull themselves up by their hard work and ingenuity and opportunity. That leaving our economy is bad for all of us. I make this argument to all of my wealthier friends, right? That we're talking about not how do we take something away from people, but how do we grow the pie? And I think that anyone who cares about that should be paying attention to, for example, electing a socialist mayor in New York, because that I think is a threat to the overall opportunity set that allowed me and Brad and others to become successful. Now, the truth in our society today is that it's much harder to become successful than it used to be, right? 30 years ago, if you were born in the bottom 25th percentile of wealth, you had about a 25% chance of dying in the top 25th percentile of wealth. Today, you've got a 5% chance, right? Dynamism in the American economy, so the overall ability for people to move their station in life, but also just the birth and death of companies and sort of creative destruction, all the things that are hallmarks of a robust and healthy economy, dynamism is going down. And I argue, Elizabeth and I argue, that's not good for anyone, no matter how rich or not rich you are.
Your first book that you wrote with Elizabeth was called The New Builders. So it's very much in keeping, I guess, with the Dunkelman critique about why nothing works anymore. We need more builders, as you say. We have fewer builders than we did. This subtitle, The New American Economy, is it what you want in the future? Does it exist in any way? What exactly is it, Seth?
So you said something that I think is a very fair criticism. That is, when people say we're in transition, oftentimes that is just their way of saying, I don't actually know what comes next. And this book is our attempt to actually say, this is what should come next, not what will come next, what should come next, which is capitalism, markets, free movement of people and goods, all of the things that are hallmarks of capitalism in our mind, and an understanding that companies have a responsibility to something other than just shareholders. And by the way, we're not the first people to say this, right? The Business Roundtable in 2019 came out, whether you believe it was lip service or not, it actually marked a pretty important moment where 200 of the CEOs of the largest companies in the United States said, hey, actually, yeah, well, employees matter, and other stakeholders.
Kind of, Seth, it's Davos talk, isn't it? It's very cheap talk, and it's very easy to make these points.
I think that, well, yes, it is easy to talk, and we're starting to see people back that up. So I believe, and we could debate, who's doing it best. I don't know that I've got a great answer to that. Some of the people we talk to, Jamie Dimon in particular comes to mind, like someone who's trying to establish a business based on values that is still, he describes himself as a rapacious capitalist, right? And so, he's got his own views on what that looks like and where the line is between politics and values. And we pushed him a lot in our interview on that. We write about it extensively in the book. I think there's a difference between the Davos set flying in on their private jets and sort of all talking about this stuff, but then not doing anything, versus the people, at least that we talk to, some of whom were people like Jamie Dimon, some of whom were, or Larry Fink, let's say, from BlackRock, some of whom were people that run businesses that your listeners probably have never heard of, and sort of the work that they're actually doing on the ground. So yeah, look, change never happens as quickly as people want it to happen, and I think that on the one hand, it's easy to dismiss even the 2019 proclamation from the BRT, and a lot of people did until 5 months later, COVID hit, and then we kind of stopped that conversation. But I think that actually that misses the point, right? The fact that this group of 200 people was actually raising their hands and saying, hey, this 50 years of dogma isn't correct is an important step in the right direction. Now, what we try to outline in the book is we can't just take that for granted. Like, we got to push it forward. When I say we, I mean the American consumer, the American public, the American investors, right? We need to put our money where our mouths are and actually require these businesses to live up to those standards.
People watching this and listening, Seth, and thinking, is this guy crazy? Jamie Dimon, the CEO of JP Morgan, Larry Fink, they're both in the headlines these days because they've suddenly embraced Bitcoin. Dimon once called it a fraud. Now he's making the investments. Fink has a piece, or there's a piece about him in The Economist this week about how tokenization, whatever that is, could transform finance. What is it about guys like Dimon and Fink that is anyway different from the traditional captains of American capitalism, the bankers, the industrialists, the venture capitalists who have run the show for the last 200 years?
Yeah. I was thinking about that recently. I just read Andrew Ross Sorkin's book, 1929. I'd highly recommend it.
I'd like to get Sorkin on the show, actually.
Yeah, he would be a great guest, Andrew. And I was thinking a lot about the similarities between the late 20s and now, but also some of the differences, right? And listen, I'm not here to defend Jamie Dimon or Larry Fink, right, or any of the other.
Yeah, but your book relies in some ways on these guys as models for the future. You can't just.
Yeah, it describes, well, we try to form our own view about the future based on talking to a bunch of people, including these two guys that you mentioned. So, and I think that sometimes in our search for perfection, we miss some of the most important points, which is people sort of doing their best in the sort of flawed ways that humans do that to make progress, always in their self-interest, because humans are self-interested beings. I didn't ask Jamie about Bitcoin, for example. I would have told him if he told me he thought it was a fraud, that I disagreed with that, because I've been long Bitcoin for a while, and I think it's an interesting technology. I didn't read the Economist article yet on Fink on tokenization, but I just interviewed the CEO of Circle, which is the largest U.S. Based stablecoin business, and there's a huge opportunity in this sort of token economy. In this is U.S. dollar denominated token economy, it's stablecoin economy, and so I think we're sort of mixing ideas when we get too far down one of those rabbit holes, because I think that we are still experimenting with a bunch of this stuff, and I guess Jamie's changing his mind on some of these things. I guess there's a cynical way to look at it, which is that he says one thing one year and then he does something a couple years later, but I actually don't think that that's what's going on. I think these are people that are doing their best to navigate a challenging landscape. The other one, we didn't get to interview him, but the other one that I would point to, which is sort of the most revered investor of our day, who really is a practitioner of what we call dynamic capitalism in our book, right? So it kind of shows that these two things come together, and he sort of survived neoliberalism and thrived in neoliberalism because he took a longer term view. Is Warren Buffett, right? And I think that he's a great example of someone who embodies many of the most important features of what we describe.
Yeah, I take your point, but again, thinking about Buffett, he was in the news last week. He made a massive investment in Google, which seems to be now the winner-take-all company in AI, or more and more people are predicting that. What has Buffett done or said that suggests that what you call this new American economy will create more of a meritocracy, more opportunity, less inequality?
Yeah, I think that he's always led with values, and I think that's very clear in his investment style. He talks about it all the time. When you look at the companies that he's invested in, for the most part, they've aligned with those values, at least from a broad perspective. Has he distributed ownership across his employees in the way that, or in the employees of his portfolio companies in the way that we argue for in the book? Probably not to the level that I would like to see. But he's experimenting with these ideas. And most importantly, and sort of the first tenet of dynamic capitalism, is getting away from this short-term view, which was the hallmark of neoliberalism and really failed neoliberalism completely, right? I mean, the average half-life of a company on the Fortune 500 is 20 years. So it's not like these companies that were practicing shareholder first policies and extractive policies were particularly successful at it. They were constantly out-innovated by new companies, who then became the entrenched companies that then got out-innovated themselves. But Buffett has always been, in particular, good at taking the long-term view and not trying to react to the market.
I take your point in economic. I take your point in moral terms, but in economic terms, or maybe the reverse is true. Buffett made a decision over the last few weeks to recognize that Google was a wise investment. So he put millions, probably billions of dollars, billions of his own dollars into Google. You talk about something called dynamic capitalism. Maybe it's the long view, but why is that leading with values? He's just a smart guy who understands that Google is likely to be the winner in AI. What's that got to do with morality or the new American economy?
Yeah, I didn't see what he wrote about his rationale for investing in Google. I actually don't think it is a unreasonable position to have taken. Google seems to have done quite well. If you'd asked me, frankly, 18 months ago, I would have thought Google was going to be the big loser in this AI war, and credit to them for navigating it. Not every decision has to always be led by sort of this.
Okay, so I take your point on Google. Let's not go down that rabbit hole. Give me some examples of whether it's Fink or Diamond or anyone else who have, what you say, led with values.
I think
what does that mean?
I think the example that I would give you is actually KKR. Right, and which is a big public private equity firm pretty capitalist in nature, right? The Barbarians at the Gate, sort of R.J.R. Nabisco movie was made on about their experience as like a raider, corporate raider, and that was back in the 80s. But they've been experimenting with specifically a guy named Pete Stavros. I don't know if you've had him on, Andrew. He'd be a
No,
great
I haven't.
guest. But Pete has been experimenting with, for example, much more broad-based employee ownership programs. I think it comes very naturally to him. He grew up in a middle-class family. His dad was a construction worker, and he saw sort of the misalignment between owners and labor, right? Capital and labor. And decided he wanted to try to operate something a little bit differently. And so he started experimenting with, and now it's rolled this out very broadly at KKR, with programs that enable more workers at the companies that they invest in to share in the upside. There's some famous examples of sort of mainline employees getting multiples of their annual salary when the companies exited. And to be clear, he didn't do this for moral reasons. And this is the argument we make in the book. Like if you separate morality from economic return, you're not going to end up having impact. And it's going to be this little sideshow, right? That's impact investing, or at least what in its purest form, or social entrepreneurship, or whatever you want to call it. But it's not mainstream enough. He did it because it drives greater returns for KKR.
So would it be fair to call it a kind of cooperative model?
I guess you could say, that. I mean, the idea of having more, look, the argument ultimately that we make in the book is that we want more capitalists. If you want more people to have a stake in the economy, more people have to have a stake in the economy, right? And one of the ways to do that we argue for very forcefully in the book is to create more capitalists, more owners. And if you look back sort of 30, 40 years ago, a much higher percentage of top line revenue ended up in the hands of workers because of the nature of those businesses. We're not arguing that companies should be less profitable and hire more employees than they actually need, but we are arguing that there should be more pathways to create more owners so people have more stake in our economy. And I think what happens when people don't have a stake in the economy is exactly what we just saw in New York, which is people who believe they will never be able to afford a house. The average age of a first-time homeowner now is 41 years old, right? So people can't afford to buy a home. They've got debt that they can never get out of because of their college debt and educational debt, and they see no opportunity. And so this idea of free stuff that Mamdani and others talk about ends up being attractive, but we know it doesn't work. I mean, you're sitting in San Francisco. How well did the socialist takeover of San Francisco work? Right, not well at all, which is why they backtracked to Daniel Lurie, and he's now been much more pragmatic about how he's operating.
Well, I have to admit, I haven't noticed a socialist takeover of San Francisco.
For
better or worse. I mean, I think that's hyperbole, just as the idea that there's some socialism come to New York. I think it's designer socialism. It's very symbolic. It's not for real, for better or worse.
Whether he can do it or not. Certainly the people that were in charge of running San Francisco were very aligned with socialist ideals. How much they managed to do enough to make San Francisco a really challenging place to live and work. And so much so that the electorate backtracked, right? We just saw that in Minneapolis a couple of weeks ago in their election. They had also people who were very aligned with.
Could you give me some examples of either politicians or companies that represent this vision of a new American economy? I take your point on Diamond or Fink, but are there concrete companies? Is it Patagonia, for example, often gets wheeled out in these kinds of conversations?
Yeah, I mean, I guess it's easy to point to Patagonia because, people on the left at least sort of love what Patagonia has to stand for. I think it's an unrealistic view for a company. And it only works because it's a closely held business. And, in that sense, Patagonia or Hobby Lobby or Chick-fil-A are kind of the same, right? I mean, they are to some extent embodiments of the values of the people that own them. And therefore have a lot more leeway to express those values in terms of politics, right? And in each of those cases has done so in ways that are pretty extreme relative to what I think is appropriate for most companies, and frankly, certainly for public companies, I don't think, I mean, you tell me if you disagree with this, Andrew, I don't think I want to live in a world where like every company has to be identified by being left or right. I do want to spend my dollars and my investment dollars, my consumer dollars and my investment dollars at companies that I believe treat their workers reasonably well and,
okay, and I take your point, but are there examples? I mean, one that comes to mind in the Bay Area, I'm not sure if you're familiar with the Berkeley Bowl, a very large supermarket, very different from Whole Foods.
Sure.
That might be one example. The Spanish side, I know you're a keen bicyclist. The Spanish bicycle company Orbea also comes to mind.
Sure.
What are examples for you of these kinds of companies?
So there's a couple big companies. So you mentioned a supermarket chain. Publix is the biggest, essentially cooperative, right, employee-owned business in the country. And there's a bunch of statistics around how much better Publix has done than their competitors in terms of efficiency, employee turnover, customer loyalty, et cetera. So they come to mind. King Arthur Flowers, another one that's also employee owned, that's done a really good job of creating this sort of rabid fan base. Optimax is a company that probably no one's ever heard of, but they make lenses and things like that. Initially owned by two line workers from Kodak, who then left, frankly, because Kodak wouldn't fund the idea that they had, and they thought it was a good idea. It turned out to be a pretty good idea. And they built a business around it. And they've always sort of tried to find this balance between what they earn and what their employees earn. And I think they would argue very forcefully that the result of that was the business grew significantly larger than it otherwise would have. And now they're working on a plan to have the employees buy it from them. Again, they're going to make money on that because they built this great business, but then their employees will be left owning the whole thing. So those are some examples that some of which are.
It's interesting that these are all very sort of physical companies. When one thinks of, and you make lots of investments at Foundry in tech, the vision in tech up until AI took over, and that's all anyone that talks about these days, was of Web3 and this re-architecting of capitalism. Is there any of Web3 in your new American economy, or is that more digital pie in the sky?
Well, I mean, if you're asking, can blockchain-based companies have values? Of course they can, right? I mean, look, and we're seeing these aren't Web3 examples, but they're technology examples. We're seeing this in AI. I don't know how well it's going to work, but I mean, both Anthropic, which is a B Corp and a sort of a trust company, and OpenAI, which is also a trust company, are trying to, and OpenAI a little bit more publicly because they've kind of struggled with what this looks like, are trying to put this sort of like trust structure above the corporate structure so that there are some guardrails, at least in theory, on the things that they can do and sort of what they're going to prioritize. Whether that works or not, we'll find out. Eric Ries, who wrote Lean Startup, is coming out with a book in a couple months that talks all about this, right? How do we create more trust companies? But there are certainly examples. Etsy comes to mind. They were a B corporation that went public and really have thrived because of how they treat their community. Rally Software was, I think, maybe even the first B Corp to go public. So there are a handful of examples of software companies that have done that. It's an interesting question. I hadn't thought about it this way, Andrew, but you're right. The examples that come to mind tend to be physical good companies. I don't know why that is. Maybe it's because they feel close, that much closer to the product somehow, but it's not to the exclusion of tech companies.
Maybe it's because they don't scale quite as well. It's interesting that you brought up Anthropic.
And they need their employees. They rely on their employees in a different way. Maybe
right. Have you looked at Orbea, the Spanish cycle company?
Yeah, I know the story, but I don't know it in depth. I'm a fan of their bicycles.
It's interesting you bring up Anthropic and OpenAI, both companies that are struggling with the issue of values in different kinds of ways. There's lots of talk in the last couple of weeks, Seth, I'm sure you've read about it, that Anthropic may do an IPO next year. Aren't they, again, examples, particularly OpenAI and Sam Altman in particular, aren't they examples of people who talk about ethics and doing the right thing and blah, blah, blah. And when it actually comes down to it, they're purely self-interested and that they're not really particularly trustworthy people. I don't want to turn this into an analysis of Sam Altman, but he does seem to be an example of the kind of person who is comfortable wearing an ethics hat, but when it comes down to it, he doesn't seem to deliver.
Yeah, I mean, that's why I couched my remarks about their trust company in the way that I did. I have some concerns about how that's going to ultimately play out, right? And you know, I think Anthropic is maybe seen from the industry's perspective as being a little bit more aligned with its mission. Dario, you know, has a view on this that he's very.
Are you investors in any of these players?
No, I'm not in either of those, so I can speak about them freely. So, but I think one of the purposes of a trust, and one of the reasons we argue for B corporations, one of the reasons Eric will argue in his new book for this sort of trust structure, is because it does provide, if it's executed properly, it does and should provide for a buffer against CEOs maybe making a decision in a snap moment that actually is against what the stated values of the business are for. And that's why, frankly, that's why I think both these companies decided to become trust companies in the way that they did, because they recognize that there's a lot of power in what they're doing, but with that power comes the potential for malfeasance and bad actions, right? And I do think it's a lot to say, hey, we trust this one person, right? Whether that's Sam Altman or Dario or Larry Fink or Jamie, right?
Yeah, and as you can tell, I'm slightly skeptical, because these people always say the right things until they don't. One example, another one who comes to mind is Mark Benioff. We did a show a couple of years ago about Davos Man. He was Exhibit A in the guy who always talked about values, but when it came down to it, was very self-interested. He's been in the news recently for arguing that troops should be deployed to the very San Francisco that he was trying to reform. I know another character who you spoke to in the book is the former CEO of PayPal, Dan Schulman, who in the last couple of months has become CEO of Verizon and has gone public on saying that he's cutting 13,000 jobs. So like Benioff, Schulman talks a good game about values until he doesn't.
Yeah, I wasn't going to bring up Schulman because I heard your comments on
well, I have a particular problem with Schulman because
I know you're not a fan.
Sort of and when I talked to Elizabeth when she was on the show, this was before Schulman became CEO of Verizon. I mean, why does he take a job where he has to cut 13,000 people? He's a wealthy guy. He doesn't need the job. He doesn't need the money.
Yeah. So two things on this, Andrew. So there were three things. One is, I love the skepticism, but look, you're skeptical of many guests. So I'm, I feel like I'm in good company, and that's fun to be able to debate this. And I think it's appropriate pushback. And this is in part why, like, reading to your listeners, like reading the book, like go all the way through it and see the arguments, and then decide how you feel.
Yeah, buy the book. It's out today. Capital Evolution, the New American Economy.
Thank you for that. I appreciate the plug. As it relates to Dan, if the bar was Dan can't show up at Verizon and fire anyone, like the idea that we should never be able to have layoffs, that doesn't make any sense. I would argue that I think that Dan, and we tell the story about Dan Schulman at PayPal and some of the things that he instituted there, that I think that ultimately he actually lived a set of values and instituted those values to a cost, right? I mean, it cost the company money to do that. I would hope and expect that he will do that at Verizon. And I have to believe this came up in his interviews with the board of Verizon, right? They didn't not know that Dan Schulman did these things and was very public about them at PayPal. So presumably that's what they wanted, right?
When you say did these things, what are these things?
I mean, specifically, he undertook a survey of their entire employee base. He thought because they paid market rates that everything was fine. And then he did the survey and he found out that many employees were struggling. PayPal has a lot of like call center style employees, people that are relatively low on the wage scale. And he hadn't realized that. There was an example of one employee was selling blood plasma to make ends meet. A lot of that was driven by healthcare costs, things like that. And so he actually worked with a nonprofit. They actually developed an indice, how to measure the spending power that people had, right? How much was going basically to basic needs and how much was left over. And he decided that there was a minimum threshold that everyone needed to reach. And he raised everyone's both pay and healthcare benefits to a level where they were above that. And that affected tens and tens of thousands of employees. It wasn't, in the context of PayPal, it wasn't crazy expensive. And it was tens of millions of dollars, but not hundreds of millions of dollars for this $4 billion company. And I would expect that, but that doesn't mean that PayPal never let anyone off, or that if PayPal's business turned down, he wouldn't, have layoffs, right? We're not arguing that companies can't, or at least I don't think we should argue that companies can't and shouldn't ever lay people off or be efficient. It's that they should treat the employees that they have properly and well. And that was how Dan viewed it. So I would imagine he'll do similar things at Verizon, but we'll see.
Let's go back to politics. I mean, it's clear that your ideas, you're pro-market, but pro-values, so to borrow a word from you, are missing in American politics. You either got the left, perhaps in New York, or the Trumpian right, the MAGA right. Does the message that you put forward in Capital Evolution on this new American economy, does it need a political movement, as both parties seem increasingly archaic and separate from the reality of the American economy?
I guess I'd flip that and say I would love it if if politicians grabbed the ideas in this book and ran with them, right? And
what would they? So I take your point. What would they do? Let's say there's a Shapiro in Pennsylvania is watching this and thinking, "Wow, I got my message for the election." Or even Gavin Newsom in California. What would you tell them to do to build this new American economy?
Yeah, well, starters, go to chapter, I think it's 16, where we have a bunch of policy ideas. We've got to get away from the rhetoric, which I think is really hard for politicians, which is why sort of we're in the situation that we're in. Identity politics. We spent so much time talking about the 0.1% issues. And we just get spun up on them in ways that I think makes no sense. I think the thing to do is to be much more pragmatic about it and be thoughtful about how do we create more opportunity for more people, and then and specifically, how do we grow the pie? We spend so much time in politics talking about how do we split the pie, and is it split evenly or fairly, and how does that look? And I feel like that those are conversations that are not important, but they happen to the exclusion of how do we create more opportunity? How do we grow a bigger pie? And, my biggest concern with the BBB was less around the specific policies, although there were plenty of policies I didn't agree with, and much more that it was just simply perpetuating this $2 trillion, annual budget deficit that's completely unsustainable. And the way out of that, the obvious way out of that is inflation, and that's going to be horrible for the American worker. And the only other way out of that is increasing productivity, i.e. GDP growth. Of course, we should try to do that, but we seem to not be able to get out of our own ways. So, our politics will always be somewhat fractious, and politicians will never quite get it right, or maybe never even closely get it right. But there are some practical things that I think we could do. I was a fan of Doge, at least the concept, right? Like the pamphlet version of Doge, hey, could we go into government and actually have a real conversation about what works and what doesn't work, and what should we continue doing and what we shouldn't continue doing? The way it got implemented didn't work at all. So that was unfortunate. But the idea behind that, we shouldn't give up on that, right? Just in the same way that we shouldn't give up on having some of the hard conversations. And I think, back to where we started this podcast, that's what, I'm sorry, I can't remember the author of the New York Times piece that just came out.
Dunkelman, who also wrote Why Nothing Works.
Yeah. So what Mark was saying in that piece, I think, is essentially that, which is Trump isn't afraid to say, hey, government's not working in the way that it should work. Let's make it work better. Right. And I think that's if that's what we should pull from Trump, great, let's do that. Right. I mean, Trump actually doesn't have bad instincts on what's going on. He just has a set of policies that ends up being divisive.
Finally, as I mentioned, your day job is at the Foundry. You're a partner at one of the more prominent early stage venture firms. Your co-partner, colleague, Brad Feld's been on the show many times talking about values and many of the things that you argue in your new book, Capital Evolution. What could or should guys like you and Brad be doing at venture firms like Foundry to actually give this thing a kickstart. It's all very well talking the talk, Seth, but shouldn't you be perhaps reinventing Foundry, just focusing on trust and on this new American economy?
You know, I mean, I think Foundry's always had a bent towards value investing, right? I mean, meaning investing in CEOs who have values. And, you know, that for us, that's worked out pretty well. I mean, the first question I ever ask a company when I sit down with them, every time I see a new business pitch is, give me your backstory. How'd you come to this? Why is this the thing you were put on earth to do? Because that sense of mission matters, right? And in the same way that, you know, I started this organization, Pledge 1%, along with a couple other people, including Benioff, by the way. Now it was
did you throw him out after his latest remark?
No, we did not. I mean, the organization has moved on past the founders, but I don't know why Mark said what he said. That
although to be fair to Benioff, he did apologize.
Yeah, no, it's we live in a time where it's very easy to stumble and where we're not very forgiving and there's not a lot of grace. So I don't know. I haven't talked to him about it, so I have no idea what was on his mind. But you know, I think that, so anyway, this organization encourages companies to give back to their local communities. We've generated $3 billion back to local nonprofits because we believe that companies that express values also are just better investments. They attract employees, they retain employees, they are sort of on a mission beyond just making money, and that ends up making them more money. And so we've always believed those two things come together, and I think we've tried to live that. And whether we've done it, you know, we definitely haven't done it all right, but we've tried to do it at least more right than wrong.
Well, there you have it. The book is out today. It's by Seth Levine and Elizabeth McBride. It's called Capital Evolution, the New American Economy. It doesn't have all the answers, doesn't claim to have all the answers. Lots of interesting conversations with guys like Dan Schulman, Jamie Dimon, Larry Fink, an important book about perhaps the most important subject of all, how to build a new American economy. Congratulations, Seth, and we'll have to get you and Brad on the show at the same time.
Would love that. Thanks, Andrew. This was great.